Hello and welcome. We will now proceed with our schedule. And with us today now we have Coinshares with the CEO Jean-Marie Mognetti. Please go ahead. The stage is yours.
Hi, Ludwig. Thanks for having us. So Coinshares. We started as a European investment firm. Our background is commodity trading. We specialize in digital assets as early as 2014, and today we are the European leader in digital asset management, specialized in digital assets. We arrived in Stockholm in 2016 with the acquisition of a company called XBT Provider from KNC Miner, and we listed in Sweden on Nasdaq First North in March 21 and on the main market in December 22. From a business perspective, we're operating 3 asset management platforms in Europe. We're operating XBT Provider, a Scandinavia-focused platform. We're operating Coinshares Digital Securities, which is focused on DSCH, and a crypto equity joint venture providing UCITS program with a joint venture with Invesco. Altogether, we're managing around close to $7 billion of assets in digital assets for our clients. As an example, we have around 70,000 clients in Sweden alone. We're operating one platform in the US right now called Valkyrie, which is a fruit of an acquisition. It was a distressed acquisition we completed in March of this year. We restructured this business, turned it around, and it's now quasi break-even with 1.3 billion of AUM already. There was only 10 million when we started looking at this case in October last year. The other arm of our business is our capital market business. This is a non-client-facing activity, which is really focusing on R&D, allowing us to understand how the market is evolving, where the market is going, and allowing us to effectively test and try everything ourselves before we submit our client to the test of it. Coinshares, from a people perspective, is 90 people. It's a 90 people workforce. We have offices in Jersey, London, Paris, and New York. It's headquartered in Jersey, and we are regulated in various different ways by the Jersey regulator, by the UK regulator, the French regulator, and also the US regulator. From a financial perspective, Coinshares is year-on-year profitable since 2016 and growing. Based on Q1, Q2, and Q3 report we have made public as of last month, you can extrapolate a yearly bottom line of around 100 million sterling for the company as a whole. Whilst our market cap is about 5.6 billion SEK right now, and our book value is about 3.7 billion SEK. So I'll let you make the math, and our book value is composed mainly of cash and restricted cash, so very simple, no intangible value, no goodwill or stuff like this. From an investment perspective, Coinshares gives you some exposure to the crypto narrative and to its upside naturally, with a tremendous convexity effect since our cost basis is not linked to our AUM. In other words, I can manage 10 billion today or 50 billion tomorrow. My cost base is pretty much the same. So a lot of earning power there. At the same time, Coinshares, due to its tangible book value, which I just explained, is giving you a lot of protection on the downside if Bitcoin were to go to zero, and there is always someone in the Swedish political circle to say Bitcoin is going to zero. So, few interesting facts to conclude, and some public information, obviously. Coinshares has only 4,000 shareholders between Nordnet and Avanza, but during the month of November, we went from 3,000 shareholders to 4,000, mainly boosted by the price appreciation of crypto in general and the Trump election. You just need to join us. We are just a click away on Avanza and Nordnet, so as you can participate in the Coinshares adventure, which is an adventure starting in Stockholm in 2016. And as you can see these days, we are also everywhere in the tube with our dog campaign. The stock, as it is right now, remains a bargain. As the CEO and co-founder, I'm not selling the stock. I actually own 18% of the company. I also have about 2% of the company in option plan. And I bought more at the IPO in 2021 and at the low in December 2022. We are very, very focused on driving the execution of our business to transform Coinshares from the European leader into a global franchise, a global challenger, and that's the place we like to be. We are much more at ease being a challenger, and we will be able to demonstrate that to the market in the coming years. That's it.
Yeah, I think we should move ahead to some questions here. What do you consider to be the key factors behind your 50% market share in European ETP market?
Well, first of all, we're first to market because we arrived on the market in 2016, so we were very, very much first to market in that sense. Second of all, our products are the most innovative product in the market, so we always brought innovation to the market and was the first to bring innovation. And third of all, our products are very much structured to be able to be validated by the most stringent institutional investors. and the most stringent, I would say, background check and financial due diligence and operational due diligence that institutional investors are doing.
Thank you. And how does the regulatory environment climate in Europe affect your growth strategy, so to speak?
I think the growth strategy was always going hand in hand with the regulatory environment. We started the company as a regulated company, and that's why NASDAQ worked with us in 2016 to acquire XBT Provider, because they needed a regulated partner. So regulation has always been part of our DNA and where we come from. However, we have fight a tremendous amount of headwinds between 2017 and 2021 because the regulation was non-existent, and every single state in Europe were doing its own kind of recipe for regulation around crypto. But the implementation of MiCA, for which Coinshares is fully ready, is a kind of validation of our regulatory journey. It's a way to harmonize the entire European Union around one regulation and to be able to passport in Europe. So in other hands, it has been difficult. The future ahead of us is much more brilliant in terms of regulation and transparency.
Thank you. And if we're looking at other markets a little bit, except Europe, how do you plan to expand your presence in the US?
So we made an acquisition last year. Well, we got the option to make the acquisition last year. We completed in March 2024. We had nothing ready to go to the US yet, and it transformed overnight through distress acquisition. Distress is really where we are very, very good at turning around businesses and implementing our process and policies. And we did just that in the US. The business had 10 million of AUM in October 2023. As of last night, the business is public information, is running around $1.4 billion of asset under management. So we turned this business significantly around. In terms of ETF launch, we were not the biggest guy. We have 5 people working in our New York office, so we can't really say we have a distribution power to compete with BlackRock or Fidelity, and we don't want to compete with them. However, we are beating the like of Invesco, we are beating Vanek, we are beating some other competitor which has much more stronger capacity than us in the US. So net, we're doing a good job, but we are planning to be bringing to the US market something we didn't do in Europe for the last 10 years. So we're trying to grow in a orthogonal way and not going toe-to-toe with a big distribution house, because there is no way we can compete. So it's like, how do we capture some market share? Crumbs of AUM in the US are billions of dollars. So if we can get a few crumbs in the US, that will very, very help us in terms of growing our AUM over time.
So just to conclude, there are some big potential going in the US and expanding some more.
50% of the AUM in the world is located in the US. So without giving too many hope, but like there is a very strong case in our analysis that within 3 years we have more AUM in the US than we have in Europe, and within 5 years we can expect to have more revenue in the US than in Europe. So I think there is a strong growth case for us in the US. The only things to take care is like, how do we grow this AUM in a way which is not competing with a big distribution house, whilst also protecting our margin, because the US market is very expensive if you don't do it properly. So we need to bring to the market high value proposition, which can be attracting higher cost for the investors, so as we have a better margin.
Thank you. And as everybody know, there's been an election in the US, and President Trump is going to return to office in January, and he has been in media being pretty crypto friendly. How do you think that the change of president will affect you at Coinshares?
I think the change of president, we are regulated by the SEC, we are regulated by the CFTC already. So for us, it's not changing much in terms of regulatory framework. It will definitely open up the land of possibility in the US when the new chair of the SEC is appointed and the new chair of the CFTC. However, I think it's go much wider and much beyond the US. I think the entire world is watching the US. When you see how the governments are looking at the US as a leadership role in terms of regulation, it's very, very important to see this step forward, because I think it will dynamize not only our US capacity, but also our European capacity, with a lot of institutional investors ready to jump from let's do nothing to let's do something stage, because now they see validation in the US. So despite what the thematic is that the US are not the leader of the world and are being challenged all the time. When it comes to regulation and when it comes to innovation, they are still very, very much looked after and look forward to what they are doing.
Thank you. And looking at crypto assets has been very strong recent here. Just a curious question here. What do you see crypto assets going forward here? Do you think it's up, or what do you see? What is your prediction here?
Up. Look, I'm not going to do Michael Saylor saying it's safe, guaranteed, and riskless. So that's not the way we have been trained by our compliance team. So let's not me tell that.
Yeah.
What I'm going to tell you is very simple. It's like there is a very strong narrative around crypto. It's a strong narrative which has been, I would say, baffled by regulators for the last 10 years in the US. There is a starvation from the US investor base to get allocation into the crypto ecosystem, and that would definitely play a game. More importantly, there is, and if we separate crypto from Bitcoin and we talk about Bitcoin specifically and keep the rest of the crypto more as tech stock investment environment, the Bitcoin narrative is very strong. The Senator Lumin's proposal to put 200,000 Bitcoin a year on the balance sheet over the next 5 years, taking it up to 1 million Bitcoin on the US government balance sheet, is a very, very powerful narrative. This narrative is already creating a fear of missing out with other governments. We saw Brazil putting a parliament inquiry last night, and we're going to see the same thing happening in Asia very, very soon. So I think overall, the narrative is higher. I'm not going to tell you it's going higher tomorrow morning. The $100,000 threshold has been playing a very strong psychological hard cap over the last week. It's going to play the same psychological cap the 10,000 level was and the $1,000 Bitcoin was. So we've been there before. We saw it. So it's going to take its time, but when it's going to bridge to go higher.
I understand. Thank you very much. And do you have any plans for new innovations or products to launch to market soon, or?
We have plenty of plans, and we can't wait to show them to the market whenever we are allowed to show them to the market.
Perfect. And one last question here for everybody looking here and also at home. Why should people invest in Coinshares look at it as a potential next investment?
Well, as I said before, first of all, Coinshares is very cheap right now. It's a 5.7 billion market cap for 3.7 billion of book value. So in terms of multiple, you're buying something which is very cheap. An alternative asset management firm is normally trading at 8 to 12 times EBITDA. So you're very much, or EBIT. So you're very much into a situation where Coinshares is undervalued from a peer comparison. And that's before you even look at a discount or a premium, depending on your view for crypto exposure. That's point number one. Point number two, the management, it's a stock which is owned by a very few number of long-term holders, and which are all investment management professional, both in the US and Europe. So you're joining a very nice league of investors who know what they're doing. And third of all, you also have protection on the downside, because the same way people say Bitcoin can go very, very high, you get some people saying, well, Bitcoin can go to zero. So if you look at this investment in terms of optionality, you get downside protection and upside convexity. So it's a very nice risk-reward payoff profile.
Thank you so much for the presentation here and answering all the questions. And we're very excited to follow Coinshares here going forward. Thank you.
Thank you very much, Ludwig. Have a very good day.